Brandon here from Building Wealth Flow. I pray that you have stewardship of the knowledge and money you're entrusted with. Today's topic, it's going to be an interview, but I want to introduce you to a great lender. I really believe in giving back and giving people something that can be tangible to their investment journey. I'm going to introduce you to a company that I've been using now for multiple years. Their name is Lending One, and it's a DSCR company. And what I want to talk about is very specific. I was in the lending industry. I have compared them versus multiple other DSCR companies and their rates apples to apples compared to others. When I've been doing my loans, and I've done now 5, have been between 30 to 50 basis points less compared to other lenders. Doesn't mean that'll always be that way, but so far in the multiple years I've been using them, they are significantly less. Well, that's significant to your portfolio when you're doing real estate lending and getting that leverage for your real estate purchases. So please listen. Like I've said in the video, I've included the link that you can go to apply with Lending One. I've used them now. I'm on my 3rd year with 5 different loans from them. When I comparison shopped between 30 and 50 basis points, what that is 0.3 to 0.5% lower, apples to apples, against other DSCR lenders. Hope you enjoy.
Yeah.
Hey everyone, Brandon here from Building Wealth Flow, and I've got a special guest, and actually Lending One has become a key partner in my business, as we all have partners and we all need those relationships, and your lender is one of those absolutely key relationships. And I've got Tim here from Lending One, who actually has experience as a investor himself, and that's what makes it more enjoyable working with Lending One. They understand what we as investors are going through, and we're going to talk about a lot of the products that Lending One has, some of my own personal experiences, and why you should consider Lending One. And I've got a link in the description of the video if you want to apply with Lending One. So look for that in the description. But Tim, thanks for being a guest here on this video today. Can you introduce yourself and we'll go from there?
Yeah. Thanks a lot, Brandon. Really happy to be here. Tim Wayner, I'm our Director of Partnerships here at Lending One. We have a partnership program where we are partnering with property managers to help educate their investor clients on how to invest, how to more creative ways to invest. We're helping them just engage their folks. It's a tough thing. Property managers are spending a lot of time putting out fires all the time, and sometimes they don't think about engaging their current client base and doing it effectively to help grow their portfolio. So we've created a couple partnership pieces that have really helped property managers do that. But yeah, excited to be here today, talking about real estate investing specifically. And yeah, you hit the nail on the head. I've been doing this real estate investing since 2010 in a couple of different ways, and I'm excited to share what we do at Lending One because it's a little bit different than a lot of investors understand.
What I've done with Lending One, and I'm going to do it again even with this video, it's a value add when you're talking to me as not only owning properties, but also managing properties for my property management company, sending information out to them so that they can, maybe if they're doing a refi and they want to get some really good rates and different products, I'm going to be sending this out in my newsletter to all of our owners. But those are
Yeah,
value adds as a property.
yeah, absolutely, absolutely, and that's where we're trying to help property managers. Not everybody does it as well as you do, Brandon. So kudos to you for that. It just ends, engagement and trying to help folks build their portfolios and being looked at as an asset manager, not just a person who puts out fires or just does leasing or just collects rent checks, right? Like, what can you do extra that differentiates you, helps you become a little bit stickier as a property manager? So maybe your clients stick around a little bit longer. Heck, it might help them think about investing more. If you make it super easy, your clients may buy 5 more properties, and when their portfolios grow, if you're doing a good job, your portfolio is going to grow too. So,
Well, I'm
you know,
talking to a
that's,
lot of owners too, of
yeah.
investors. So you've got quite a few products that even today, as we were talking beforehand, that I didn't even know you had. So I'd love you to share some of those products, and then we can talk some more about those.
Yeah, sure. Our main product is our DSCR loan, which is our debt service coverage ratio loan. It's underwritten a little bit differently than a typical loan, and I think we'll get into that a little bit later. But some of the ones that I really like and the ones that I've used most recently are bridge loans, where we're financing a lot of your construction costs. If you've purchased an asset and it's distressed and you want to fix it up and rent it, or maybe do the BRRRR method where you're buying, renovating, renting, refinancing, and repeating, that's a really great product for you. We do up to 92.5% of your loan to
Okay.
construction or your loan to cost on those. Um, we also do fix to flip as well. Uh, the really cool thing about our fix to flip is the length of time that we can do those loans for. A lot of times, if you've got a hard money lender, you've got really tight restrictions on how long you can hold that
Right.
money. We can extend it out a little bit for you, and that's a
Which
good
is key.
segue to,
That
yeah.
key, because we've got a couple in our group that they've called it the slow burr, where it's a little takes a little bit longer. So you offering that product, tell me some options. What are some typical links that y'all can do on some of those?
Yeah, so you'll see a little bit, you'll see a lot of hard money lenders in your local markets do 6, 8, 10 months. We really focus, it's 12 months, and it's from when you start the construction. It's not from when you close the loan,
Okay.
and you don't start paying your interest on it until you've actually received your draw from those loans.
Oh,
Same thing
like
with
a
our
typical construction loan.
yes, I was just going to say exactly like our ground up loan, which sounds like is what you do. And I've got one that I've just done recently. That actually, we can extend the ground up construction. If you own a lot, we can fund 100% of your ground up construction, and we can do that for up to 24 months. And I'm sure you've run into the same issues
12
that I
months is
have on.
good because most of them are
Yeah.
12 months. That's an
Mhm.
extra benefit.
Yeah, absolutely. And again, it's the same thing as you're not paying interest on that money until you actually utilize that money. So I know we've all, or many of us have run into the issue where we've got a survey issue at the last minute, or we've got something with the city, or we've got something with the inspector, or some sort of titling issue, or anything that might come up. Or an architect takes a month and a half longer than we thought they were going to, where we own a property, we might be ready to start building, and something happens, right? And so having that little bit of extra time where it's really not costing you any money is really advantageous for our clients. Yeah.
Then you mentioned something beforehand when we were talking of some type of interest only product for a period of time.
Yeah, that's a great question. So our DSCR product, our debt service coverage ratio product, where we are underwriting the asset, not the individual. That's the big difference there, right?
Yes.
We're not taking your last 3 years of tax returns and trying to see if you can pay back this debt that you're taking on. We're looking at the asset. Does the rent cover the actual principal, interest, taxes, and insurance? That product has a couple of variations in it, one of which is a 10-year interest only loan. So for the
Okay.
first, it's a 30-year product, right? So you still have this loan where it's a fixed rate for 30 years, but the first 10 years is actually interest only. And so the last 20 is it's just amortized over the last 20 years of the loan. And so if you have kind of a tight project, or your goals are to try to maximize cash flow early, and you might be looking at selling after 10 years, or you might be looking at,
Right.
maybe you put a little bit of money into it now, but you want to really, really renovate it, or maybe you're going to tear it down and build on that same lot in 10 years. It's a really great product for that. Or if you're trying to build up your portfolio quickly, and like if cash flow is super important as you're trying to do that, it's a really great product for you to use there as well.
You know, you mentioned something on underwriting the property. You know, I've had personal experience just recently when I was doing a couple of my projects in our personal name with a traditional mortgage, and I just remember how much Well, just hassle that was of documentation, and it's just one question after the next, and you answer that question. Well, that adds another 10 questions. And what my experience has been recently with you, and I'm disclosing here, I'm on my fourth and fifth loan with your company, and they go so smooth and so quickly. It's almost they're waiting on me. They're that ready. And that the documentation is just about the property, and I'm not having to submit tax returns. Is just a whole lot less hassle. But what I've experienced personally, and this is why I'm a believer and why I'm bringing you on board in my sphere, is those rates were even better than my mortgage lender could provide and pretty significant. And he was like, I can't match those. Not only could he not match them, he couldn't match the hassle. There was very little hassle with working with your company and talking through even different structures. Talk about that. So if I'm doing a traditional hold on a 30-year type of amortized product, there's even strategies in that. And what I do is try to optimize my rate, and you've got lots of options.
And I assume you're talking about buying down points there.
Yes.
And how did you shared previously that you were getting great interest rates and I said, oh, you must have bought that rate down a little bit, right?
Yes.
And so yeah, I mean, yes, yeah, you mentioned a few different things here, and so I'll answer your last question first. Yeah, we've got a bunch of different options, right? Like you're able to buy down points to a certain extent depending on how far down we go, down the line we go there. And that's certainly a great option. If you want to hold something for 30 years, that's fantastic. It's kind of the opposite of that 10-year interest only
Yes,
uh,
exactly.
payment, right? So your strategy is just different. It's not that it's better or worse, it's just a lot different than somebody that might be in my shoes where I'm trying to build up my portfolio really quickly. And cash flow is super important to me right now, and I want to try to maximize that. And I may not hold properties for 30 years. I don't necessarily want that risk on my side of it. So I want to do an interest only loan, whereas you're saying, hey, if I can spend a little bit more money on the front end to try to buy these points down and lock in that rate for 30 years, that's my strategy. That's how I'm going to, but my equity is going to grow and make these valuable assets versus me. I'm looking at distressed properties that I'd like to come in and maybe fix up and then just rip out the cash flow from it as quickly as I can.
And
And
that's
then
what you
potentially,
have more. You're not pigeonholed into one single product. And that's what I love about
correct.
one. And when I talk to Edward on a regular basis, we're talking different options. We're looking at different things with a prepayment penalty. What's the floor where I can buy it down to? We're looking at those. And I'm getting real consultation of, okay, what is your strategy? Now he knows mine, so we go right to what we're doing now. But like
Yeah,
you said, there's different strategies and different products even within the DSCR realm for
absolutely.
different strategies.
Yeah. Yeah. The other thing I wanted to just briefly talk about, just because I'm experiencing it right now, this is not a bash on your local banks. They serve a great purpose. I'll continue to use them for real estate deals myself. I'll continue to use private lenders, hard money lenders. They all serve different purposes. But just to piggyback on your experience, I've got a loan maturing on a loan that has two properties in it that I've had for 10 or 12 years. I happened to refinance it to a 5-year loan a few years ago. It's maturing in May. They emailed me and said, Tim, we need these 10 things.
Yes.
And it was 10 line items, including this K1, this K1, this tax return, this tax return. And I have a partner in that. And he's kind of a silent partner. And trying to drag that out of him would take me weeks of work just to get it out of him. And this is my best friend. So, when you're working with a lending one where we're underwriting the asset and we're lending in an entity, not to the individual,
You're right.
it just we have the ability to make it a little bit easier, a little bit more streamlined because of the way we're looking at this loan. And so I think that's an important note. One, just that this is not bashing community banks. They are great. They
They
definitely
serve a
serve
purpose.
a
Every
absolute purpose.
institution serves some purpose for a specialty of their that they're good at.
Right. We're just able to accelerate a little bit faster because of the position that we're in. And so People should know about that, and people should be able to take advantage of that if this is their investment strategy, which it's hard to say it shouldn't be. I mean, land's the only thing they're not making more of, I think.
That's exactly right.
Yeah.
Well, your company, and I've worked with, talked to multiple DSCR lender companies. And what I've appreciated about Lending One, and still yet today, I've never had anyone that can beat what you're providing to me. And that's why I'm such a believer. And I put your name out there because I believe it's the best product out there. Why are is your company so competitive on rates?
Yeah, I mean, our backing is very important to us. We're backed by Blackstone, and that helps us in that regard. We've got a couple of different folks who buy these loans from us that we've got a really great track record with, that understand who we're working with. They understand how we're underwriting these loans originally, and we've made a good name for ourselves in the backing side of things. I think a big differentiating factor for us on the front end of things is just, we talk about speed and ease all the time, right? And getting to know our clients a little bit more deeply, right? Understanding their investment strategy,
Right.
especially on our PM partnership side, right? You keep mentioning Edward, who is our loan officer, that everybody who is in our PM partnership program goes to Edward right now, right? So he knows who our clients are. He, he understands your investment strategy versus my investment strategy versus Juliana from Indianapolis's
Yes.
investment strategy. So that really, I think, is a differentiating factor for us, and just on the service side of things, right? And I think just overall, we're able to be a little bit more flexible because of our backing. Like I said, we're able to to fund things a little bit more easily because of that backing.
Speaking on that, I just made me think of a question because I know there's some other DSCR companies, they're concerned they sometimes lose a backer or a lender and their rates fluctuate quite often. Would we have any fear with Lending One? Are y'all, how secure are you with your product? Because I hear about others that struggle with that.
Yeah, I mean, listen, we're not the only private lender out there that does DSCR loans and bridge loans, right? I mean, again, some of our terms and the way, the commitments and things are a little bit differently and a little bit different and a little bit more advantageous for the investor. But yeah, those of you who don't know who Blackstone is, very large company, and
Very large.
no, I guess the short answer is no. We're very comfortable in where we stand in
That's what I
terms of
want to
our
make sure everybody
backing.
understood.
Yeah, we've never, to the best of my knowledge, there's never been a push on a loan where we couldn't fund the loan, which is oftentimes an issue with private lenders. Is, they've got a ramp up of, hey, we want to try to do this many loans, but they don't actually have that money in backing, and so they have to push closing dates and things like that. To my understanding, that's not happened here since the acquisition by Blackstone. And so it's extremely secure, it's extremely well funded, and that's not an issue on our end at all.
Good to hear. Tim, as we're kind
Yeah.
of finishing up here, is there any other thing you could talk about of why, the product and why they should use you, Lending One? I want to educate those investors, but what would you share?
Yeah, I mean, for me, there's a reason I came to work for Lending One, and I've spent 17 years in the property management industry, and there's a reason I came over here. That's because I believe in the product, and what I believe in the product is kind of what I just said. So sorry to repeat myself a little bit, but I think it bears repeating a little bit, is that the folks at Lending One, the loan officers, the people at the top of the organization, they really do understand investors, and they want to understand what investors need. And so we're constantly pushing to improve there. Do investors need more flexibility here? Do investors want a higher touch loan officer that understands their strategy, that can talk to them about that can actually advise them on how to navigate a particular project, right? And I think Lending One does a really good job of that last part, of helping you navigate the particular project. just as an example, the property I was telling you that I've got on the market right now, it was a kind of a complex project where I was purchasing something that was a distressed asset. It had a small little lot next to it. Thought it might be buildable. Had to go through a bunch of rigmarole on that end of it. But
Right.
Lending One actually helped me navigate that whole project. Right? They were advising me on like, hey, here's what you need to do with the asset that's currently sitting on the land. Here's how we should close this loan. So, we should bundle this whole loan together instead of parceling it out. We should make sure that you buy it all together so that we can then fund 100% of your buildup, your construction costs, right? I had Hunter Smith here, who's a loan officer who was teaching me how to be an investor. And like I said, I've been doing it for a long time. I've done historical rehabs, I've done ground up construction, I've done fix and flips, I've done fix and rents, I've done multifamily, single family, everything in between. And I had a loan officer here teaching me something, how to do something. So I think that's just a really big differentiator. It's not just about closing a loan, it's about being a true partner. And I'm sure everybody would say that, but I've actually lived that experience. And I think that's really important.
No, that's good to hear because you're actually, when you describe it, I'm thinking of one person from my channel I'm going to contact here in just a little bit who asked a question that your company might be the right fit for him because he was wanting to refi a product and separate out a piece of a parcel on that so that he could do a build, which then y'all could finance the build. You might have that product that can work with him on that, but you know, being more than just, hey, I'm giving you the money. Not only that it is good that the money is, I call it cheap, cheaper than a lot of the others. It's less expensive, but you actually
Yeah,
consult with them because you've many in your company are living it yourselves as investors. Those are great consultants. They become a more key partner.
I agree 100%. Yeah. And that's their sole focus, right? Is to help you get loans, help you get them closed fast and help you
Yeah.
understand what you're actually getting into. I've worked with hard money lenders before that you're exactly right. Here's the money, go do your project. And suddenly you're like, oh my gosh, what did I get myself into? And you start paying interest on that money right away, right? And so, yeah, it's a real benefit to have the team that we have here, and trying to constantly improve on that too, right? We're not just sitting around resting on our laurels. It's a culture of constantly improving here and trying to be there for investors and different stages of investors too.
Yeah, I think, me thinking through it as an owner myself, I think your in lending partner is one of the most important partners in the portfolio, especially not just in when you're growing, but even after your portfolio has matured and maybe you're going to do a cash out at some point. That relationship is one of the core relationships, and I think this discussion is valuable because people need, a lot of people don't have these relationships where they build a actual relationship, and that's what I've built with Edward. I've gotten to know Josh. Now I'm getting to know you, Tim. It's we're
Yeah.
building some relationships over these years that I hope people can join in that with you and with your company, that they can be a key, you can be a key partner with them. So I love this interview
Yeah.
as we're going. And any final statements you'd want
Yeah.
to say?
Yeah, I mean, you asked me to talk about our products, and the one I didn't let out yet, but I'm glad you're talking about it. Is if you're an investor of one property, we have products for you. If you're an investor of two properties, we have products for you. If you want to build from the ground up, if you want to renovate, if you want to rehab, we have products for you. We also have a portfolio loan as well that we do,
Yes.
right? And if you own multiple rental properties and you have some that cash flow, you have a couple that don't, we actually will help you bundle those into one loan. Again, speed and ease, right? Easy. It's one payment, right? It one interest rate to worry about, right? Like you don't have to worry about quite as much. I think you mentioned common sizing earlier. This would kind of be a way to common size it to a certain extent, right? Um, and kind of build your portfolio, do it all in one space, and you can actually do multiple portfolio loans with us depending on the size of them. So yeah, we really want to be a partner again, whether you're a one a one-off landlord that wants to buy another property, if you want to buy 20 in the next couple of years, we want to be your partner there. So we want to be flexible and have all those different products for you, including, hey, let's bundle these properties all together to make it easier for me to manage as I continue to grow. So yeah, we've got a lot of stuff out there for you, and I'm excited. I'm continuing to grow my portfolio just through lending one personally. So I hate to be the hair club for men guy, especially with my hairline, but I'm not only the director of partnerships, I'm also a client as well. So
That's
I
good.
truly do believe in it. Yeah.
Well, Tim, thank you for this discussion, and I hope everybody paid attention and you would reach out as I put that link in the description. And I'm very careful and actually choose extremely carefully who I recommend. So this came with a decision that I feel confident with in all of my listeners that I would fully so far had great experience and would fully recommend. So I hope you understand that I value those referrals and I send them out. I'm careful of who I refer only to great people. So
Well, we certainly appreciate that endorsement, Brandon. Thank you. Thank you so much for that endorsement. That's really meaningful. I'm glad you've had a great experience.
till next time, talk to you soon.
Thanks, Brandon.